One of you guys sent over this article from HomeDay, the real estate agent of the next generation, as they call themselves, discussing your guys' favorite topic,
the German real estate bubble.
It's always cool to see what other people in the industry think. And this article is just a couple of weeks old. So let's see if we have a real estate bubble in Germany or not. In this GermanReal.Estate blog, the article starts off by explaining how a bubble starts in the first place, which I feel most people are completely ignoring these days. Most bubble believers just look at property prices in the past, compare them with property prices today, and come to the conclusion it has to be a bubble. But that's making the world easier than it is, and that's not really how it works. We discussed this in many videos already, and HomeDay says the same. They used the 5 steps of a bubble we also used in the podcast episode with Diana from Künzel Investments. The blue arrow are the fair or real property prices that are justified by rents and by salaries, displayed in the gray arrow, which is the correct way to determine fair property prices. We discussed this in a video a couple of weeks ago and found out that rents in Germany are actually getting cheaper. A surprising fact for many people. Now a bubble starts in step 1 if the demand outgrows supply. That is certainly the case here in Germany, if you compare the construction numbers we have over the last 10 or 20 years. That leads to step 2, sellers ask for higher and higher prices when selling their properties. This happened in Germany as well if we take the numbers from the Postbank Wohnatlas. In 2018, property prices rose on average by 7.2%, 9.3% in 2019, 9.6% in 2020, and 14.2% in 2021. Summing it up, we are talking about an average property price increase after inflation of more than 40% in just 4 years. And the rise was higher and higher over the years. This looks a lot like step 3 and 4 when property prices get overvalued, doesn't it? Not so fast, my friends. If there's one thing we're trying to teach you here on this channel, start asking the why question. Why did property prices here in Germany increase so much? We had super low interest rates which made it affordable for almost anyone to buy a property. And we had a really strong economy, which means people had relatively high salaries. And when interest rates are at 0 and you have nothing to invest your money in, you start buying properties that are really affordable because of the low mortgage rates. Do you see the self-reinforcing cycle here? And because of the self-reinforcing cycle and the increased demand from migration to Germany, we couldn't build enough properties. High demand, low supply, property prices go up. And that's where we invite you to be part of the solution for affordable living here in Germany by funding the projects of property developers on our GermanReal.Estate marketplace. You can start with just 100 euros, you'll earn an interest rate of up to 12% per year, and you help that we have more supply of properties for people to live in. After 40% property price increase in 4 years, the Postbank Wohnatlas from last year shows a minus of 0.7%. Does that mean we're in step 5 and the bubble is bursting now? Let's see what HomeDay says about this. They give a couple of different reasons why the bubble burst in step 5. Buyers are simply not willing to pay these high property prices anymore. And if the demand goes away, supply has to lower their prices in order to sell properties again. It could also be that suddenly a lot of properties are being constructed and there's way too much supply and not enough people who want to live in all these properties. That's certainly not the case after the largest real estate company in Germany stopped all their construction projects for 2023. This is only gonna make the housing shortage worse over the next couple of years. And it's already the worst housing shortage of the last 40 years. And lastly, this may be the biggest reason why the German real estate market slowed down a little. Mortgage rates increased because of the war in Ukraine and the inflationary pressure from about 1% to 4% last year, making it a lot more unaffordable to buy and own properties. Those are the 5 steps of a bubble. Do we have one of these now in the German real estate market? And if yes or no, should you buy a property now or wait? HomeDay says it's not that easy to answer if we have a real estate bubble or not, which I completely agree with. You would need to look into the future to know exactly. In order to evaluate with today's information, we can only weigh arguments for it and arguments against it to make an educated guess. Nobody knows what's gonna happen in the future, except if you have a crystal ball. Then it may be possible. Pro-bubble arguments are that property prices increased over the last years. We've seen it in the Postbank Wohnatlas earlier on. 14.2% in just 1 year after inflation. Is a little much, is it not? Especially in the top 7A locations like Berlin, Frankfurt or Munich, the increase in property prices has been enormous. The counter-argument is that property prices in the C, D and maybe even some B locations are still very affordable. The majority of the property price increase was in the big German cities only. That leaves properties in the big cities overvalued according to the German Bundesbank and the Swiss bank UBS. Especially in Frankfurt and Munich, they find properties to be up to 40% more expensive than they should be in terms of fair valuation. As most, if not all people buy properties with a mortgage, you can also look at mortgages more in detail to see if we have a real estate bubble or not, which shows a clear no. Because of the new mortgage regulation, the Wohnimmobilienkreditrichtlinie in German, banks are only allowed to give mortgages to financially responsible people. Subprime loans that made the real estate bubble burst in 2008 in the US wouldn't be possible here. Also, most people in Germany fix their mortgage rates for 10 or 15 years. It will take years or even decades before real estate owners feel the effects of the increased mortgage rates of last year. And that brings us to our last question: should you buy a property now or wait for the bubble to burst? It depends. It depends on a lot of different factors that are really unpredictable. Mortgage rates, inflation, construction numbers, salaries, net migration, and so much more. It's very tough to answer questions with lots of different variables. There will always be at least somewhat of a speculation involved. There was definitely a slowdown in the market last year and this year, and it's quite unlikely that all the issues will be solved soon and we go back to 14.2% price increase year over year. But that doesn't mean the entire real estate market is and the bubble will burst. There are still really good opportunities available, and that's why I personally and we at GermanReal.Estate continue to invest in real estate. It's just not as easy as 5 years ago. Nowadays you have to dig a little deeper to find the gems. You can see our gems on our GermanReal.Estate marketplace that is linked in the description. This is by far the easiest way to invest in real estate, and our investment minimum is just €100. Have fun investing and see you in the next video.